We have Joseph Nakhla, CEO of Tribe Property Technologies. It's a pleasure to have you back on, Joseph. How are you doing today?
I'm doing great, Aaron. Happy New Year, Merry Christmas, and Happy Holidays.
Yes, I'm excited to take some time off, but very excited for the new year. So it's a pleasure to have you back on the channel. Can you start by giving our viewers a quick update as to everything Tribe has been up to since we last spoke?
Yeah, absolutely. We've been busy. So obviously for your viewers that are somewhat familiar with our company, just to remind them, Tribe is a prop tech company. What we really do is build technology and deliver services for residential communities, people that live in condos, people that live in rental communities. And what we have done historically is that we traditionally compete with property management companies. We just deliver our services slightly different. We start with our technology, we digitize the whole community and provide all of our homeowners with apps that kind of simplify living in the great communities that they've chosen to live in. So we've been busy. 22 has been a great year for us, despite of all the challenges, in the industry and in the micro cap, if not the whole stock market overall. And since we've spoken last, we've closed on a couple of transactions. We've also announced another. When I say transactions, I'm referencing merger and acquisitions. We're very, very active in that space. We buy traditional property management companies and convert into our service delivery model. So since then, we've announced a great acquisition that very, very, very close to bringing over the line, but we have announced it because all the terms were negotiated. It is PCI Warrington Residential division that manages a number of well-recognized communities here in British Columbia.
Yeah, it's great to hear you've been building through these challenging times, because it has been a challenging year. And let's talk a little bit about your third quarter results. So Tribe recently reported their third quarter 2022 financial results. Can you tell us a bit more about this and the numbers?
Yeah, we had a great Q3, and we had a record, really, from a revenue point of view quarter. We had a year-over-year growth of almost 11%. We hit $4.5 million, north of that actually, in terms of revenue. So we're very pleased with it. It's a reflection on just the number of the contracts that we've been able to secure, plus our organic growth that we keep adding to our number of communities that we keep adding to our install base. We've also launched in Q3 a number of interesting products, mainly, and the biggest news essentially is our two-way marketplace. So Aaron, as you may know, people that live in our communities have needs just like everybody else that lives in a condo, like you. I can see behind you. You need to get maybe group buying power opportunities to purchase products and services that make life easier for you. And since we have a good relationship with everybody that lives in our community, we have a digital and payment relationship with them, we're able to negotiate with service providers group buying deals and make those available to you on your phone. And you have the choice of purchasing these products if you wish to. Some are related to your condo, like insurance. We have some great lending products, and even products that allow you to find good service providers that maybe want to do work for your condo. And we have some stuff like grocery delivery and what have you. And we're obviously embarking on some more interesting smart technology solutions for homes and buildings as well. And you'll see more of that in 23.
Yeah, it's going to be an exciting year for you guys. So the company also recently announced a partnership with Enter Savings. Can you tell us what this means for Tribe moving forward?
Yeah, so many of the people that will have followed our vision will know that once we are in a community, our goal isn't just to manage this community and make it very healthy. Our goal is to also allow the homeowners and the community to thrive and be green and be very efficient. It's no surprise to everybody that the world is getting a little bit more tighter. Everybody has to tighten their belt. Interest rates are up. And the effect of that usually is capital expenditure of every single home will be more constrained. How amazing would it be if your building can be more efficient, not only from a cost point of view, but also from a carbon footprint point of view? So really, our partnership with Enter Savings is really designed around taking products and services they offer, for example, LED conversions or HVAC management, and EV installations, and a lot of the products that seem to be very desirable for every building, but they're very expensive from a capital point of view. And actually finding ways to to deliver those with a strong ROI. So the building doesn't have to come up with an upfront capital expenditure. Through our partnership, we can actually get that finance for the building, so we can install these new systems in the building that make them more efficient. And actually what pays for it is really the efficiency that's been created. And once that hardware and or systems have been paid for, the actual benefits and savings go into the bottom line of the building, which means it goes into the bottom line of the people that live in the building. So this is something you're going to see us be very active on in 2023. I think it's a completely underserved, spoken a lot about. A lot of people speak about green buildings and how we're going to make every building more efficient, but very few companies have been able to really bring these solutions and integrate them directly into the home. And because of our position as the property management service provider, we're really well equipped to do that because of our digital services.
Yeah, that really makes sense. And it's nice to see you focusing on that. So as we move into 2023, you just mentioned higher interest rates. The real estate market, is expected to slow down even further. Will this affect Tribe's business, and what advantages does the company have over its competitors?
Yeah, no, it's a great question. One of the things that we love about our business is, as has been proven, it's pandemic proof, and we also believe it's recession proof, or even real estate slowing down proof, if that makes any sense. At the end of the day, there's more demand on housing in Canada than it's ever been before, and especially in the big markets where we operate. And you'll see more and more condos being completed. People have to move in. Overall, these condos and these buildings and these apartment buildings have to be managed. So it really doesn't matter what the real estate sales numbers are doing. But to your point, really what we think the interest rates hike and the slowing down of potential slowing down of the market will do is it'll essentially make people pay more attention to how well their buildings are managed. And we think that really bodes really well for a company like us. In a time where the market just keeps growing year over year, and sometimes some people will argue irrationally, if your condo is going to be worth $100,000 more next year, no matter how good the building is being managed, you may not pay attention to the operations. But if the market slows down and you really want to make sure now your community and your home is in good hands, we think that bodes well for a company like us.
Yeah, that really does make sense to me. So during challenging times like the ones we're in, the smart companies tend to innovate and plan ahead so that they emerge stronger and more resilient than ever before. Obviously, it's even in my business, something I've been really working on is innovating, providing value. So can you tell us more about your vision for the company and what you're doing now to make Tribe stronger and more resilient than ever before as we move into 2023?
Yeah, I mean, we've always felt that our if you look at our core business and even chunks of our revenue, the overwhelming majority of our revenue is a recurring sticky business. We have the lowest churn numbers in the industry compared to the industry average. We continue to hit our organic growth numbers. So we've always felt that our business is very resilient. But I think your point is really well taken, and which is in a slowing down market with a lot of volatility, what does a company do? And there's usually two answers. You either go play defense or offense. And in our case, we don't necessarily feel the desire to play defense. We think our business is strong. We have an incredible team. We've got a lot of contracts ahead of us to execute on in 23 and beyond. If anything, we actually going to go on the offense and identify more opportunities to be active in. So you'll see us active in M&A. You'll see us very active in acquiring new contracts with brand new developments and master plan communities. You'll also see us very, very active in bringing, using our technology that we built in 22, which is a two-way marketplace, and populating more and more services for our homeowners to help them have a better life, lower their monthly spend. And in our case, obviously, we generate revenue and transaction from those sales. So you'll see us actually continue to grow our revenue per door. So we feel pretty strong that our business is in really good hands. Our team has done an incredible job, but you'll see us be active and opportunistic in M&A.
That's a great plan. So what are some of the major catalysts investors and prospective shareholders should be looking out for in the near future?
Well, as a company in our age, I've always spoken about growth. I have enough grays, as you can see, Aaron, to know that I've been through a few down cycles in the market. So, people on the street can expect us to be aggressive from an M&A point of view and continue to increase our revenue. And as you may know, and I may have shared that with you last time, we were blessed to be awarded a Fast 50 award this year, which is just a reflection of how strong and steady the growth has been over the last 4 years. And we've also been awarded there in the Fast 500 for North America as well. So it just kind of illustrates that the company is continuing to grow. So you'll see us be very active and continue to grow our revenue. You'll see us start really tightening our gross margin numbers and start creeping towards profitability even further, even quicker than what we've probably communicated to the street, just because we think our company is ready for that next level of maturity. Plus, we also want to be very in a strong position as we let the capital work for us in the future.
Exciting times ahead for you guys. So finally, where should investors and prospective shareholders go for more information on Tribe?
Well, we're TRBE.com. We have a full section on the site that has all of our presentations, all of our financials, all of our interviews. So anybody that's interested in that, please visit TRBE.com.
Awesome, Joseph. Well, it's been a pleasure. Thanks for all those updates. Best of luck for the new year, and we'll definitely have you back on early 2023.
Same to you and your viewers, Aaron. Thanks for having me.